Hi everyone, today let's talk about FedEx earnings, then we'll check on seasonality, as well as the charts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So FedEx warned about weaker demand and their stock tumbled more than 10%, an absolute falling knife here for FedEx. You can see 10%, and they mention here analysts saw a drop of less than 1% for the next fiscal year, but they say revenue will continue to be under pressure from macroeconomic environments. Adjusted earnings per share was a pretty wide miss at 3.99 versus 4.18, and then revenues here missed as well, not great. Everything coming in weak, and they also saw revenue fall 3% from a year earlier, which is not great. And the reason I wanted to bring this up here today, when it comes to shipping companies like FedEx, I typically view these as a bellwether for demand in the economy. UPS and FedEx are the two drivers that I look at quite often, and FedEx turning in pretty rough numbers is not a great indicator for markets going forward or the economy as a whole. Definitely something to keep in the back of your mind. Moving over to fear and greed, I might make this a daily piece. So let's take a look at it here today. You can see yesterday was extreme greed at 79. And then here today, we dropped all the way to 72. You can see that pretty sharp decline here on momentum. Stock price strength still very high. Breadth still very high. Put call ratio still extreme greed. So extreme greed in all the indicators except for the headline number. But it is interesting to see a pretty substantial drop of 7 points on this indicator with the fall that we saw here today. So moving over to seasonality, we've been talking about this pretty regularly. We are here at the 20th. You can see there is a dip low expected in this region. Typically from the 18th to the 20th is a little bit weaker, and then into that Santa Claus rally towards the end of the week. But the difference of what we had been seeing is that you can see the Russell was already quite a lot higher, and then you can see this really aggressive rally that we saw across markets during the early part of December. So we kind of overshot in terms of the strength that we were looking for, and now we're seeing just a little bit of a decline. We hadn't been declining this whole way like was expected. And the question is, will this be a little bit pushed to the right like I talked about in previous videos? Will we see a little bit extended fall towards the end of the year? And then we see that rally more in the beginning of January in terms of a Santa Claus rally. Definitely interesting to see where we are relative to historical averages. Moving over to the calendars, consumer confidence beat massively. 110, absolutely very, very strong. Well above the 103 expected. Previous number was revised down a little bit, but not very much. And then existing home sales also beat pretty strongly. Looking at tomorrow's data, we have GDP at 830. That could be interesting. Saw a massive sell-off here today. Maybe that's a little bit of foreshadowing on the GDP numbers. Definitely something to watch for. And then looking at jobless claims, continuing to watch that on Thursday, as well as initial jobless claims expected to be a little bit higher than the previous read. And then Fed balance sheet, always fun to watch on the end of the Thursday session. Moving over to Max Pain, still sitting in that 470 area. You can see markets are now well below that number. Definitely interesting. Well below those call walls at 476 and 480. You can see just how massive those have gotten. Those continue to grow in terms of numbers. Total options almost up to 1.7 million. Put call ratio continues to be very high, which is interesting. We do have these two spikes on the call side, but in terms of volume underneath the curve here on puts, still pretty strong. 465 seems like that first wall. Wouldn't shock me if we push through that a little bit down to 460 on the S&Ps for the close, down to the bottom of the calls. 465, 466 in that region makes sense on that 465 put wall, but we're pretty clearly between these two levels here for this week, in my opinion. Moving over to the charts, it finally happened. We'd been talking about a stronger pullback, and look at those massive candles. 0.97% and then 0.51%, almost 1.5% in just two candles after a very slight push higher on the consumer confidence and new home sales. And then once that data was in, we saw a pretty significant break. 474.78 broke, took out the trend line, took out the next level, touched that 144 EMA on the hourly chart at 467.62. Next level for me, 467, almost on the dot. We're right on top of that 9 EMA here on the daily chart as well. Definitely an interesting level, but you have to respect this pretty strong move. Couldn't get above 474. We talked about it yesterday. Stopped at that level, wicked that high, and then broke down really dramatically. If the 9 EMA on the daily chart breaks, then we have a lot of room down to that 21 at 461, as well as a trend line. So everything looking a little bit more bearish, especially on the shorter time frames. Moving over to the NASDAQ, you can see similar price action, rallied up, consolidated, broke down really strong, really powerfully. That was almost 1.5% on the day, so not great there. Got a slight bounce from my 403 level. Obviously, I would not trade that bullishly. This was a very powerful move, took out a lot of levels very quickly. And then look at the volume here on those 15-minute candles. You can see that last 15-minute candle was 1.5 million on the volume. We have not seen a volume on a 15-minute candle like that for a long time, and it had a lot of selling pressure. So lots and lots of selling at the end of day. I think this is just a little bit of a relief after hours, as the big players tend to sell during market open. So we'll see a little bit of relief. I wouldn't expect it to get above 405.50. That'll be your resistance. If we touch that level, I would expect a breakdown, and then your price target there would be 403 on the first push. Next push would be right around that 400 level. So everything looks quite a bit weaker in my opinion. Again, massive down candle, took out multiple days of price action, big volume, step down on the daily chart in terms of momentum, and everything looks weaker going into tomorrow's session. Moving over to the Russell and the Dow, the Russell did hold up quite a bit better, still had a very big down candle, 2.66%, but the Russell does have a little bit wider range. You can see we touched that level at 201.88. Expected that to be resistance, got there, touched it, pulled back strongly, took out my 198.75 level as well as trend. And then we are down in this previous consolidation right at the low here from Friday. Ended up holding that level a little bit. Again, I think small caps are going to continue to outperform, at least in the short term, but I still think they will have at least somewhat of a pullback. Dow doing similar things, took out all of these lower levels, took out the 55 EMA here on the 2-hour chart. Next level, 369.50. Remember, this was all-time highs here for the Dow, so there wasn't really a level to wick, but we've kind of created one now. Let's go ahead and add a level at that wick high, 376.35. We'll see if that continues to be an important level on the Dow. But big down candle, same thesis as everything else, massive volume, bearish momentum. Everything looks weak for tomorrow. Moving over to the equal weighted S&Ps, big down candle on the daily chart, 1.65%. I didn't have a key level here. There was nothing really to work off of, just this consolidation going back to April and February of last year. So I didn't have a level here. I was really watching these previous highs. You can see we are well below those previous highs now. 155.79 was that level. And you can see 153.19 is the next one. We're sitting right on top of that 9 EMA. Big breakdown on RSI, big breakdown on momentum. I would expect at least to move to that 21 EMA down at 150.91. Moving over to FedEx here just for a moment. You can see those massive down legs that we talked about on their earnings. That first candle was 9.74%. On the after hours yesterday, fell again in the pre-market, 1.5%, fell throughout the session, about another 1.25%. You can see in terms of levels, we got to this 247.28 level. That is these wick highs from this previous pivot, as well as this pivot point here going back to 19 September. Touched those levels, did find a little bit of support, but not much. Ended up closing below it. Next level, you can see here at this pivot, which is 239.34. Almost wicked it on that first candle of the pre-market. Didn't quite get there. I would expect it to get there a little bit more over the next day or two. Obviously, a massive change of trend. Below all of the EMAs and SMAs, looks very, very weak on that earnings. And then you can see that massive volume. You can see how little volume there was on these other days. And then here today at 1.76 million, massive selling on FedEx. And it really had a good run into the earnings, which is not always a great indicator, especially if they don't deliver on earnings like FedEx didn't, falling all the way from 283 down to almost 239. Moving over to Apple and Tesla, both of these broke their structure. You can see we were in this rising, expanding wedge. That level broke. Held the 55 EMA, didn't quite test it. And this now looks like a high, lower high setup, breaking down, waiting for that midpoint to break. Then you got the 144 sitting down at 188.58, just below my level at 189.96 in that 190 range. You can see there's a lot of volume in that area, might be pretty heavily defended. That is the zone that I would be looking for on Apple. Similarly on Tesla, we were in this channel. As soon as that channel broke, pretty significant down move during the session. That was 3.7%, bearish momentum, bearish RSI, everything looks weak, RSI below the 50 point. In terms of where we are going here now, let's go ahead and expand that one out on Tesla. This chart is tough to read. It's been all over the place over the last year. You can see we had this really strong down move into this 200 area. Inverse head and shoulders rallied up to a consolidation, broke that, looked okay, and then now that structure has broken. As long as it holds this level at 246.50, that could be interesting. I don't necessarily know if it's going to do that, but that is an important level. I do have it as an intermediate level. The major level is still that 255 and 232.50 area. So it could still hold this. Definitely interesting. If that breaks, then you're looking right back down to the 200 in that 232 area, which at this point does seem possible with everything breaking down so strongly. Moving over to Broadcom and AMD, we have been watching semiconductors as they continue to lead markets higher. We talked about how momentum was fading, and finally it happened here today. Big leg down, almost 2% on just this candle here. Overall down more than 2% on Broadcom. Obviously it is still way up, but that does give it a lot of room to fall before we find major support. These were all-time highs, so we don't have any levels. Let's go ahead and start to add some here at this previous high. We'll go ahead and add one here just as a kind of midpoint. I would expect to see something in here at that 1063, right at this wick low from that first candle on 13 December, where we find a little bit of support. And then AMD, similarly, we had been fading on momentum, big breakdown, took out that 138.94 level. Next one, 132.45, that could be interesting, got the 55 EMA. Sitting at 130.95. Bearish momentum, bearish RSI, everything looks weak, at least in the short term. The question is, will these structures start to break down through these longer term EMAs, or is this just a little bit deeper pullback into some support levels, and then we see a consolidation and rally from there, which does fit more with that seasonality that we talked about on the earlier chart. Moving over to staples and discretionary. Staples and discretionary both had a big down move, almost 2% on staples, almost 2% on discretionaries as well. Staples actually fell a little bit more, which is unusual. Could not get above that 144 EMA. We talked about 2 tests in a row. We ended up gapping down and falling super aggressively. Took out 70.85, took out VWAP, took out the 21 EMA. Next level you would look for is 68.91, as well as that 55 EMA sitting down at 69.07. So nothing really to see here until we get into that zone. Similarly on discretionaries, still holding above the 9 EMA on the daily chart. So this one's a little bit more interesting. Let's go ahead and widen that out. You can see it's been on a massive run, big down candle, wicked the highs, engulfed just about 4 days of price action, well below 180.10. Next level is 174.76. You also have the 9 EMA sitting at 177.23. Let's go ahead and jump to the 2-hour chart. You can see we did close right on the low, gap down, didn't move much after hours. 55 EMA sitting at 176.58. I would expect to push through there. You can see that highly traded zone at 173.30. Couple of levels that are interesting in there, but again, big trend change. Might see a slight pullback, but I would expect any rallies to be met with sellers at this point. And look at that volume, big volume. Last time we saw a volume like that goes back to 15 December, which is not that long ago, but pretty strong selling considering the big rally that we had seen going up to this point. Moving over to energy and oil and gas. I talked about these in yesterday's session as potential opportunities. I still think that they are. We tested that 144 EMA on both of these. Once again, could not get above it on a closing basis. And then we engulfed pretty much the entire previous candle. We're still in a consolidation here on oil and gas, and really on energy as well. You can see the same consolidation area from November. I think the interesting level here is 83.55, sitting right at that cluster of EMAs. Similarly here on energy, you got the 200s sitting at 135.23. Always a pretty decent level, coming off of a pretty strong low. So we have a low, pull back a little bit, establish a higher low, rally through. I do think energy is seeing a little bit of demand destruction and some risk in next year's numbers. But overall, I still think energy is one of the better places to be, especially because everything else is pretty overbought and energy is not. Moving over to breadth on the 20 and 50-day averages. Look at that candle on the 20-day. Massive breakdown in momentum, massive breakdown in RSI. Support is down around 50.75, so that gives you a lot of down move potential over the next couple days. I'm kind of expecting a move similar to this, where you have at least 3 or 4 strong days in a row before you start to see some kind of consolidation. And then similarly here on the 50-day average, 6.21%. Doesn't look as strong because this is so wide, but I want to throw this up to the weekly chart and then widen this out. You can see typically you get just a couple of weeks in this zone. We've been talking about it just about every day. couple of weeks in this zone, significant breakdown. We are at a couple of weeks waiting for that bigger breakdown. I do think it is set to come. We also saw the weekly chart momentum step down towards bearish, and very rarely on weekly breadth do you see a reversal of conditions once you see a step down. So you can see it here. Step down, continuation, step down, continuation, step down, continuation. Multiple moves like this in a row. And those falls are not usually small. They are pretty significant falls on the 50-day average. Looking at yields just for a moment, I want to highlight the fact that we did not see a spike in yields with this fall on equities. That has been kind of what we had been seeing. You can see spikes in yields that we had, which were really just slight pullbacks. We saw equities kind of fall when we saw that kind of price action, but really we saw a big down move in equities, and then we saw a big down move in yields across the board here, 2-year falling, 10-year falling, and equities falling. So definitely interesting to see that. Does seem like the opportunity right now is in bonds. Moving over to the dollar, you can see the dollar did rally a little bit after that pretty big down move yesterday. Consolidated, expanded up towards that 144 EMA. This is a consolidation here now. You could argue this is a higher low. So let's go ahead and make that adjustment as a shorter term trend now. There, so you can see we did have that low, rallied up from there. Tested that same trend line, rallying up from there once again. Does seem like the dollar is showing a little bit of strength. We also have a significantly higher level in terms of RSI on the daily chart. So clear divergence, momentum stepping back towards bullish. Seems like the dollar's down move has kind of stalled, if not looking for a slight reversal of trend. Overall, dollar strength, typically not great for equities, and that is what we are seeing, at least in the short term. Moving over to JNK and TLT. JNK falling here today, along with the rest of equities, makes sense. Typically JNK moves with equities, and that is what we're seeing. Tested that 94.82 level, pulled back from there. This looks like a high, lower high now, looking for a bigger pullback on JNK. And then looking at TLT, this does look like the inverse. Continues to go higher, everything looks strong. As yields continue to look weak, again, I think TLT and the government bond sector is where there is at least some opportunity, as well as beaten down names. Major markets are pretty overbought. Moving over to the VIX, we did get a VIX breakout. We talked about this trend here yesterday. It was rising here slowly, broke out massively here today, 9% on that move. Bullish momentum, bullish RSI, well above the 9 and 21 EMAs. I would expect at least a touch of this 1490 area, which would give you about another 1 or 2 days of really strong push if we continue at the current pace. We'll see how that plays out, but overall, still expecting a push into this zone before we see any kind of major resistance. These trend lines have been very important over the last several months, and like I said, I would expect a push into that zone at a minimum. Look how strong that push was on RSI. You can see the read yesterday was 41. The read here today was 52.5, so really strong. I would expect this to continue higher over the next couple days. Moving over to my accounts, I did lose some money. It's really frustrating the way this works with covered calls. Obviously, I can't lose money on this IWM position until the markets fall quite a lot lower, all the way down to 187. I did roll this in and down just a little bit. I was at 189 for about 58 days from now. I rolled it in 2 strikes and down to 37 days from now, because I did want to give myself a little bit more flexibility. I do think markets are going to fall a little bit more, but you can see 187 for about a month, which gives me about another $10 of downside protection. And then I have $13.21 protection after that. So really can't lose money here for quite a long ways. Obviously, if the IWM craters, I would lose money, but in the short term, pretty well protected. You just have to wait for these numbers to balance out over the next 30 days. And then on the Qs position, I did take off all of my shares. I'm looking to reestablish myself with some puts. I have some puts at 402 for 2 days from now for $1. So looking to buy shares at 401 in 2 days, which would be the Friday session. I do think we'll see another down move tomorrow, even if it's a short-lived rally up into that 405 area. And then I have a 401 here for 6 days from now for $1.41, looking to buy shares at $399.60. So looking to reestablish that position quite a bit lower. I also rolled in and down on these covered calls as well. Again, rolling them to that 37 days to expiration. Just about the same in terms of credits, just lowering my break-even point and giving myself some opportunity to make a little bit more money in a shorter time frame. In terms of what that looks like on a profit loss graph, if we move a little bit lower, I make a little bit more money. If we rally too aggressively, I would start to lose money because I don't have any shares on right now. I can obviously put those shares back on if I need to, but a slight move down would give me a little bit more profit because of all of those calls with a heavy weight that I have. So slightly bearish going into tomorrow's session, looking to reestablish those share positions at lower prices. Also, let me know if you like this in the comments. I don't go over this section in every video. I will include it more often if you like it. Let me know down in the comments section what you thought of FedEx earnings. Are they a bellwether, or are they just a company that is going to slow down on their revenues? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.